Hi, my name is Alex Ronce, and I'm getting a bit of feedback. I'll be your moderator today. I'm the Executive Director of Paytex Canada. We're an industry association that represents fintechs and payments. With me today are a few familiar faces. We have Alice Davidson, VP and General Counsel at Mogo. We have Lawrence Cook, CEO of NanoPay, and Hannah Zaidi, who leads regulatory R&D at Wealthsimple. To all the great guests and all those listening in today, thank you for joining me, and I hope you're all as excited to start the discussion as I am. With that, let's jump right into it. Hannah, first question for you. Wealthsimple has been in the news lately. You guys are framed as one of Canada's success stories, even being associated with Drake. Things seem to be fine for fintech in Canada. So if all is fine, why is everyone talking about frictions for fintechs and the need for policymakers to iron them out?
Yeah, that's a really good question, a really loaded question. So I'll try to keep it brief, but no promises. So, let's go back to 2017. The Competition Bureau indicated that there was a number of barriers for fintechs and paytechs, like the lack of provincial and federal coordination. There was a ton of recommendations that were really, they still hold true to today. And if you look at them, actually, nothing has actually changed. There hasn't been a lot of progress. So there's a lot to do from a fintech perspective. The fintech sector, as been pointed out in multiple forums, is too reliant on the oligopolistic banking sector that perceives fintechs to be a threat. Instead, fintechs are forced to partner with their competitors who charge them above cost to access to what really should be more like a public utility. And I think you've used the example in the past where you're comparing it to the telecom sector, where without the CRTC to actually ensure that privileged market positions aren't being abused. And so, a company like Wealthsimple, we're working with essentially, the bigger we get, the more challenging it is for us to partner on a scale that makes sense for us. And additionally, we have other lines of business and in the payments world and the crypto world. Canadian banks are very reluctant to provide services to money service businesses or crypto-related companies, no matter how strong their risk or compliance programs are. Really basic infrastructure has too much friction. It, discourages consumer choice. And then I think the other piece of it is, there's a lack of middle players, middle services that enable fintechs. You see a lot of these in other jurisdictions like the UK and the US, where you have regional players that are now opening up there and unbundling the financial services that they provide and partnering with banking as a service platforms to help access, things like deposit accounts, the payment rails, and other services. That doesn't exist in Canada at the moment. And so you don't have a lot of choice as a fintech, and you definitely have a ceiling.
So that's a lot of frictions, number one. I'm not always sure that consumers realize that there are so many frictions behind the scene, because fintechs do, I think, a good job getting past it, managing it. Alice, I want to turn it over to you. Assuming you don't have any frictions to add, and please add them if you do, what do you think the government has done so far well to address these frictions, to allow Canadian fintechs to more easily thrive?
Well, I certainly have frictions to add. I think Hannah summed it up pretty well, very well, and the list goes on and on. I think, I do want to add some. I think just more broadly, fintechs are forced to take on additional risk at a higher cost and constantly find workarounds in order to continue to provide the financial products and services that are innovative that consumers today demand and expect, for that matter. So that the demand is there. And again, we don't have a framework, or both legislative, regulatory, to Hannah's point, the sort of the middleman that enable this. So we're doing it. It's just not being done in the most, economical way. It takes time. It takes money. In terms of, taking on additional risk, consumers expect instant funding these days, right? I mean, it's a foregone conclusion. The infrastructure is just not there for us to do that. So ultimately, if we want to compete and we want to provide that as an option, we as companies have to take on that risk of a customer defaulting on that transfer of funds. So that's a specific example. I also think there's a challenge in having to establish credibility and trust. I think that's a major friction point as well. There's, a tendency to sort of paint all fintechs with a broad brushstroke and, take this assumption of you're doing something bad. You are trying to upset our sound financial system. Watch out, consumers, right? We need to protect you. And, Mogo is a public company in Canada and US, and we're held to a very high standard, yet we're continuously trying to earn that trust and that credibility, mainly because of the noise that's out there in the marketplace, right? And a lot of misinformation. And Hannah, you said it as well, we're forced to partner with financial institutions and other players in the system in order to deliver the products and services that we're doing today. Again, it's not scalable, it's at a premium, but it is there. And ultimately, there's a lot of power and control coming from the players that we are reliant on. So those frictions 100% continue to exist. And in terms of your follow-on question on what the government has done in addressing them, I think they're taking the time to really identify our goals, our needs, the pain points. And that's been really done through a sort of a very collaborative approach and consultation, formal consultations, informal, speaking directly to fintechs, to industry associations. But unfortunately, that's sort of as far as it's gone. There's a lot of talk, but very little action. Hannah, 2017, 4 years that this came out, right? And to your point, there's loads of recommendations in there and nothing that's been acted on. So I think that's the frustration. You ask me why, of course, legislative change, regulatory change is slow. But I'm quite frankly tired of that excuse. All industries are being disrupted. There's probably something to be said about regulation making as well. I think the other point is a lot of the regulatory making and the government's approach has been focused on fostering innovation and, how do we do that? And a big piece that's been missing in the discussions that I think we as an industry keep bringing up is competition, right? And fostering competitive behavior, and that's sort of the anti-competitive behavior that exists today. So, I think I'm tired of saying it's a great start, right? Because it's like, okay, well, what's the next step, right? Let's put our foot where our mouth is and actually take some action and enact regulation that is appropriate and that can evolve over time. It's not going to be perfect, but let's get something out there.
Alice, you mentioned trust, which I think is an important thing to bring up because Budget 2021 promised new regulation for fintechs and payments. Lawrence, I want to turn it over to you. If the implementing legislation passes before the House breaks and fintechs and payments get new payments regulation, what's this going to mean for them?
Yeah, so thank you, Alex. I think in terms of the hurdles and the friction that's added, I'd point out that actually regulation also adds friction to the system. And, back in 2014, and I'm afraid some of this is my fault, I put up our hand and I said, we'd be happy to be regulated if you give us access to the payment rails. And the good news is they heard the first part of the sentence. The bad news is everyone's forgotten about the second part of the sentence, because what we really wanted to do was a trade, and the trade was regulate us in exchange for access. But instead, what we're going to do is add friction to the system and regulate us without providing any line of sight as to when we'll actually get the access bit. And the access bit is what we need. And you've already heard, from both Hannah and Alice say they actually have to partner with their competitors to be able to do what they're doing, which is extraordinary. It is anti-competitive. And what we really want is a solution that is the best for Canadian consumers and Canadian businesses. And to do that, we need to be allowed to innovate. And we cannot innovate if we've got one arm tied behind our back. So we've been denied access, and we have to overpay for the basic access that is available everywhere else in the world. I think the second thing that we can expect in terms of on top of getting regulation is actually regulation that is, I hope, really consistent with what has gone on in the rest of the world. So I'm hoping, and that's what it looks like right now, that the RPAA will follow what's already happened in Europe and other jurisdictions. Because there's no point in being this late to the table and not learning from everyone else's mistakes. We don't need an invented in Canada solution. We can just copy and paste what they've done in Europe, and they've 10 years ahead of us. So we can just do what they've done right and implement it in Canada, maybe with some subtle changes. But we don't need a invented from scratch, reinvent the wheel in Canada, which is what our banks would like to do. So I think what we can expect is regulation before access. What we can expect is that we have taken 2 steps forward, but we've also might have taken 1 step back. And that is, we were expecting changes in the CP Act, Canadian Payments Act, to start this access process. And I actually think we've taken a step backwards on that.
So Lawrence, there's a lot you mentioned there that I want to follow up. Especially the part about access to the RTR and CP Act amendments. We have a question from someone in the audience about that. But before I get there, I just want to ask one more question to the whole panel about the Retail Payment Activities Act. Lawrence, as you said, fintechs and payments, we're asking for more regulation. They want to be regulated by or under a fair and sensible regime. And at a high level, when you look at the RPAA, looks like it could be that, but the devil is, as everyone always says, in the details. So when it comes to the operationalization of the Retail Payment Activities Act, what details keep you up at night? I want to get you all in on this. Hannah, let's start with you.
Yeah, I think Lawrence totally hit the nail on its head when he said that right now we're it's great. We've made progress on, the front that there is going to be an RPA now. But it really is where we stand from a fintech paytech perspective. It is regulation without access. And I don't think anybody in the fintech paytech ecosystem is saying that, we don't want to be regulated and we don't want to be subject to, additional oversight and requirements. From a consumer protection perspective, we think that's completely reasonable and we're willing to do, what is required. But I think some of the challenges around, okay, well, when is this actually going to happen? What are the timelines? How do we actually position our businesses in a way that, we're able to actually meet those requirements? But I think more broadly, to answer your question, I think whether it's open banking or access to the retail, real-time rails, I think I agree that the devil is in the detail in making sure that, these are accessible and reasonable. And in order to really support competition and innovation, like I said, we need to balance privacy and security and liability, but we also need to make sure that whatever system we create is actually inclusive of all sizes and businesses and can actually capture a broad range of industry participants. So this also, is making sure that under the RPA, for example, the registration process for, these industry participants isn't so onerous or prohibitively expensive that we're back to square one. The process should really be commensurate to the size and risk. Or, for example, the rules on how client funds are custodied, it should be done in a way that won't create more friction around how money moves. We're actually able to, achieve consumer protection and innovation, right? The idea is to allow it to move instantly and in a way that is operating, right now, but in a way that's also realistic. But again, let's take a step back. I'm really supportive of the fact that there should be an entity that's able to impose financial penalties and compliance orders on companies that break the rules. People in the industry often equate being registered as a money service business with FINTRAC as being regulated, when really FINTRAC is a financial crime intelligence agency. It doesn't actually supervise the business of providing money services. So whether that's money transmission, virtual currency, etc., with the exception of Quebec, who actually has a Money Services Business Act. This is definitely a major gap in the market. And so this is required. But again, we need timelines. We need, further engagement with, especially if the Bank of Canada, for example, is going to be the regulator. We need to have more interface. And like Alice mentioned, we're still in that state of dichotomy where like fintechs are perceived as a threat. And I don't think that's a productive place to be.
Alice, do you have any thoughts you'd like to add?
Yeah, I mean, I will echo what both Lawrence and Hannah said in the sense of, okay, great, you've given us oversight and regulation, but no corresponding changes to level out that playing field. Like it's just ridiculous, right? If anything, it sets us back even further, to your point, Lawrence. And you're going to hear us all say it over and over again, give us direct access. I mean, that's really the only way to truly empower customer control and choice, right? Because if we're doing it via our competitors, they're still basically holding the bag, controlling everything. And, it's frustrating. And a lot of consumers, they don't understand what's happening behind the scenes. They just see the product. They're happy with it and don't see what happens behind the hoops that we all jump through. So, again, good start, and agree that there should be a regulator. In terms of just broadly of looking at the regulations, I think it's really important that they're technology agnostic. And we really have to regulate not for today, the present, but for the future, right? Like we're already so far behind and our product offerings, services offerings are only going to continue to evolve. Crypto is really taking a foothold. It's going to keep going that way. So we can't now come up with legislation that reflects principles and ideas from 2017, 2018. It's got to be brought up to date and continue going forward. And there's got to be a way to keep it up to date. And do I have the solution of how to do that? No, but I think regulators really do need input from the players of what is appropriate. I think it needs to take into effect digital first businesses, right? And there's still a tendency for legislation to be written in a way where you imagine consumers going to a brick and mortar store and, maybe it'll mention websites or online, but come on, people live on their phones these days. And that digital adoption has been going for a long time. The pandemic has only accelerated it. And here's this opportunity for regulators to take advantage of that and enable it, right? People are staying at home. They don't have direct access and it just hasn't happened. So again, technology agnostic, enabling consumer choice, consumer power. I think the piece that's also really important is financial literacy and education. And that's going to really help garner and that trust and that credibility that we talk about. And it's not often when we think about consumer protection and financial literacy, it's all the scary things of watch out, this might happen, you're going to lose all of your money, and there's these nefarious players. 100% that exists, but part of protection is, again, enabling and empowering and providing knowledge and making it clear to Canadian consumers, that choice does exist, and you don't have to just go historically to many people can't even access, right? The underbanked, the unbanked, they can't access the main FIs, or you've got people in remote communities where their only option is a credit union. They literally have no other choice. So having that, writing the regulation in a way that enhances that and supports it and educates. And yes, there's bad players out there, but there's really good ones, and your money is safe. And, we're not open banking doesn't mean we're opening up our sound financial system and letting in all the crazy people that are going to take advantage of it, right? And that's the messaging that you see, and or often, posters. You got to put a poster up in your brick and mortar store. You can't do that digitally. Okay, well, you've got to have these disclosures. Half the time, we know people don't read them. Make them clear, concise, right? Like it's not rocket science that we're talking about here. It's literally reflecting in legislation what is already happening today. And if I think about specific things, that's more broadly, but I often say in the payment space, our biggest challenge in delivering all of our products and services has been instant and irrevocable payment, right? I talked about taking on risk in the beginning. And again, consumers they don't want to wait 4 days for their transfer into their digital account to clear so that they can buy crypto or load a prepaid card. They want it that instant. And because of our payment system is not modern, and we're getting there. But again, we don't have direct access. We as companies have to say, okay, well, you know what? I'm going to rate that customer based on their risk profile, and I will take the chance. I will give them instant funding, and just fingers crossed, they don't revoke that electronic funds transfer. And I understand the rules are there in place to prevent fraud, but they're not there in place they don't protect companies from fraud, and there's perpetrators of that, right? So, modern payments legislation, access to rails, that is what's going to enable us to have that instant and irrevocable payment and allow us to continue providing our products and services at a scalable manner, at a way where we can actually profit from it and not just sink in all the money to enable these solutions. So yeah, I think maybe I'll stop there. I can keep going.
No, that's really good. I'm glad you also emphasized the importance of building for the future. I've heard in the context of the modernization of payment systems and financial sector policy that sometimes Canada seems to be building railroads when the world is building airplanes. But I want to get back to that after. Lawrence, there's a question in the chat that I want to put to you about regulation and access to payment systems. The question goes like this. Canada's banking regulation is seen as a gold standard for maintaining the integrity of the banking payments. How do you think fintechs will be able to maintain that integrity when they're given access to the RTR if they aren't regulated quite as heavily?
Yeah, so great question. I think simply put, the giving fintech access to the RTR will not, cannot possibly impact the integrity of the banking or payment system. So firstly, there's been broad access in Europe for more than 10 years. And there's been no chance or no example of a systemic failure. In fact, the worst case scenario is the situation which actually happened with Wirecard in Europe. And Wirecard, just so you know, was a bank. So actually the worst failure of integrity to the payment system was done by Wirecard, which was a bank. So, and there are lots of failures in banking all the time. There are two things on integrity. The first thing is that the big difference between a fintech's regulation and a bank's regulation is banks make money out of thin air. So because of fractional reserve banking, they create money, and therefore they need to hold funds on deposit so that if there's a run on the bank, they can actually deliver. Payment companies and fintechs do not do that. They're not creating money out of thin air. They're just moving money around. And as a result of that, it's transformatively different and it adds no risk to the ecosystem. The second thing is that the RTR is pre-funded. So it doesn't even matter if you're a tiny player or an enormous player. If you don't have the funds already pre-funded, you can't affect a payment. So you can never introduce any risk into the ecosystem. And the last thing, and this is I think one of the most important things and the biggest misnomer, is that when you give access to the RTR, you're not actually adding everyone into becoming clearing and settlement day one. Now, you might have large players that eventually are introduced into clearing and settlement, and that'll be done with the central bank. We can't. That's so far away in Canada right now. We can't even see that. Right? It's miles away. It's years and years and years away. So to be clear, when a fintech initiates a payment in the RTR, what they will be doing is they will be instructing their bank to move money from their bank to another bank. So I can't see what the risk is because actually the money is not even leaving the banking system, right? It's exactly what happens today. The only difference is we want to be able to initiate the payments in and out of us. And to be clear, unless we're a bank, all of the funds that we have will be held in a bank. A great example of this is there was a bank that recently joined Paytex, and when they joined Paytex, they sent us a check. And that check was not written against their bank. It was written against another bank, a big five bank, because even banks use banks to hold their money. So it's a complete misnomer to think that any fintech is going to add any risk to the stability or the integrity of our payment system. The last thing I was going to say is that, in answering this particular question, was that in Brazil, they've given completely open access to anyone. So pretty much if you've got an email address, you can sign up to access Pix in Brazil. And we're very active in Brazil and we've been using it and it's fabulous. Do you know that after 6 months, 41% of payments have moved to that rail? 41% in 6 months. So there's this massive innovation that's occurred because they just opened up access. And what they said is, we're going to let everyone go at this and we're not even going to regulate the small players. Only when you get above a certain threshold will we even start regulating you. And we haven't worked out all the regulation yet. We'll let the innovation happen first and we'll work out the regulation second. So the only thing that they did regulate is they opened access. And by opening access, they get the competition and they get the innovation. And in Canada, we're doing it the wrong way around. We're starting with the regulation, and eventually, when you've checked all the boxes, maybe we will actually enter the modern world. But if we look at a global scale, we are a decade behind Europe. We're even further behind Asia. We're actually not even competitive as a country in any of our businesses because we don't have access to the payment rails. The other thing, and I was going to pick up on one thing on the RPAA, and you asking about the devil's in the detail. The one thing that I do have a slight concern on the RPAA is it's really been designed by larger fintechs, and my concern is that if you're a 5-person company that is super innovative, you cannot possibly have the resources to meet all of the compliance requirements out of the gate. And if there's not going to be broad access, I think we're missing out a lot of the innovation. So we've really got to think about small, innovative companies and how they can also be a part of this system. And at the moment, we focused on global companies or public companies or larger companies that can do this. There's no reason why we can't create a 2-tier system where you have effectively connection service providers that could be provided by the likes of the companies you've already heard. So, Alice could certainly provide that, and Hannah could provide that on behalf of the smaller fintechs. So, I do think that there's a huge opportunity to get access to everyone quicker. And maybe if you're a smaller company, you're going to have to partner with another fintech, but much better partnering with another fintech than partnering with a bank who's trying to compete with you.
Hannah, do you have anything you'd like to add?
Yeah, a couple comments actually, and I totally agree with Lawrence in that the RPA is being designed by larger fintechs and not Canadian fintechs. Also, if you look at the composition right now of members, it's the PayPals, the Visas, the Squares, these really large global players who are extremely knowledgeable, but obviously the size and scale is something beyond that of even a Wealthsimple or a Mogo or a NanoPay, for example. And I think that's a little bit problematic. Mm-hmm. But to add, maybe a little bit more of a philosophical take to what Lawrence is saying, I think one thing we actually have to keep in mind is that money transmission or payments is not an activity that's limited to or owned by banking. And in many countries around the world, we actually see regulatory frameworks that allow non-bank entities to easily engage in these activities without bank intermediaries determining or providing access, exactly like Lawrence mentioned in places like South America. We're seeing a huge drive towards this. And one of the biggest, most successful fintech sectors that are being created right now is in South America because of these regulatory changes. But I think historically we've gone in this direction for 2 reasons. I think it's really how our financial services regulation stack has been kind of created, where you have, it's from the top, where you have like the Minister of Finance and the Bank of Canada that's overseeing, a lot of these things on the federal level, and then you have the provincial regulators that are looking at it, the securities and the credit unions, and so. You combine that with the 97% of deposits are concentrated with the big 5, right? Which is a statistic that I use quite often, but I think it tells you a lot about how the Canadian, financial sector is actually structured, exactly like Lauren said. Like, you have smaller banks that are using the big 5. It's all concentrated in one place. It's not a coincidence that we're, still in this place where there hasn't been a lot of change, because this is something that is actually potentially addressing like the unbundling of payments from banking.
So I heard you all loud and clear. You need access to the payment systems. Hannah, maybe starting with you. So say you get that, say fintechs get that. What would access to the real-time rails actually mean? What would they be able to do for their customers that they can't do today, or maybe that they can do today, but they just find really challenging?
Yeah, I think Alice has actually articulated really well. I think like really low-hanging fruit. I think forget about like future innovation and the use cases that we could come up with that we can't even imagine right now, because that's really what innovation is. Right? It's not use case driven. It's let's open it up and see what happens. But I think just like if low hanging fruit right now, it's really those irrevocable instant payments, right? It's the level of creativity and things that we have to solve for to like work around the ability to protect ourselves as a business, but still provide the experience and the expectations that consumers want is extremely challenging, expensive, and it's risky, because unfortunately these are the avenues in which fraud and financial crime also occur. So you're constantly having to balance the two, and that's not a great place to be. And I know this is not just an issue that fintechs have to deal with, it's an issue that banks also have to deal with. But I think the benefit is going to be that we're not going to have access to that for a very long time, for the foreseeable future, based on my understanding.
Alice, I'd like to turn it over to you. So banks have long had control over the origination of their customers' payments. They have access to the payment systems. They can presumably do anything you can do with access to the payment system today. Whether they do or not most efficiently in the most risk-based way is a different question. More generally, what is it that fintechs are doing today that's novel and meeting long unmet consumer demand?
It's a great question. So I think, broadly speaking, democratizing finance, making it available across the board, across communities, across age groups, whether you've lived in Canada your entire life or have recently immigrated, don't have a credit file, it is making, fintechs are basically including everybody. It's all about financial inclusion and financial empowerment. And a lot of that is done through, again, by providing free products and services. You've seen, we're still far behind the rest of the world, our neighbors to the south, Europe, Asia, South America, but you've seen things like free credit score monitoring that are coming out that enable, again, educate consumers about, okay, this is your starting point. This is maybe why you can't get a loan. This is how you build it up. Free stock trading, free crypto trading, automatic saving and investing. No fees, right? No monthly fees for these services. Amazing user experience, digital first, ease of use, convenience, choice, things that just don't exist. All the big fives were so excited when they launched apps, right? Like that was a win from an innovation perspective. Half these apps didn't work very well, or you had multiple apps to take care of multiple different product offerings. What fintechs are doing, they're making it all literally available, on your phone, touch of a button, you can do all of these things. And there's restrictions in terms of innovation, legacy systems, all the things you hear about. We don't have that, right? And we've got our own challenges with the lack of access and having to rely. But I think by nature, by being innovative and thinking outside the box, we address those issues, right? And come up with creative solutions. And as Hannah said, it's all about use cases. That's all we're doing. We're problem solving, right? What is it that people need? What is it that they're missing today? I said it before, but really banking the unbanked, the underbanked, even the already banked, just giving them more choice. I think about lending in the fintech space, and people that, don't have a lot of choice. They literally will not get a loan by going to a regular bank. And whether it's taking an example of somebody who's recently immigrated, doesn't have a credit file. Don't even want to talk about our credit reporting system. That's something else that needs to be disrupted. But, if you haven't been here for 3 years, or you're freshly out of school and have never had a job, it is really hard to get started. And at that point, it's also easy to be taken advantage of by again, players that charge high rates, that, don't provide any means to sort of get out of that high debt, high cost of credit cycle. So it's really, again, about access, inclusion, looking at different data points when making a credit decision about somebody. It's not just about their credit history. If you've got access to their cash flows and relying on open banking and a consumer-directed finance framework, you can actually make better decisions, better risk profiles for those customers based on their current situation and how they are using products and financial products and interacting. Education, literacy. A lot of we hear fintechs talk about user experience, and a lot of it, again, is about convenience and ease of use, but a lot of it is also about those touch points where you're actually explaining what you're doing, gamifying finance, right? Making it cool for a matter. You've got a ton of teenagers now that are interested in asking about stocks or asking about crypto. They want to know about it, and you're not going to learn about it in school. You're not going to learn about it from maybe your family, from the banks. The fintechs are the ones that are allowing you to sort of, take control of your finances and here's how you start from a young age and how you position yourself to be successful, and why it's important to save, why it's important to invest. A high interest savings account, 1.5%, is that kind of the rate right now? How is that high interest savings account? That money's just sitting there, right? Giving people the opportunity to do more with their money. I could go on and on, but that's really, I think, really just, again, inclusion, empowerment, control, choice, and convenience.
So I think those are some great use cases. And earlier on, someone mentioned the Competition Bureau's FinTech study, which identified a number of barriers in front of fintechs who try to do all the things you mentioned, Alice. And to develop that list of barriers, I think the Bureau spoke with more than 25 regulators, each of whom has a sliver of the fintech portfolio in Canada. So coming back to all those great things you said, Alice, when it comes to offering those things as a fintech, when it comes to growing vertically and horizontally, what challenges are created by operating in Canada, where you have so many disparate regulators across the federal and provincial governments, each with their hands on a different part of what we call fintech in Canada?
Well, it's certainly not easy, and I think you've hit it dead on. There's a myth often that fintechs are unregulated, right? And they operate in the wild, wild west. There's no rules, anything goes. And that is simply not the case. I could speak for Mogo, and we keep what we call a legislative landscape that we're constantly reviewing. And it's, over 300 pieces of legislation that apply or potentially apply or may apply to a certain aspect of our business. We've got, 15 to 20 primary regulators that we deal with. And we're not afraid of regulation, right? That is the problem. But we want appropriate regulation, and we want harmonized regulation. And that's not unique to fintech. That's been, I think, a pain point in Canada just generally, given our federal-provincial split. And what it does is it just creates a major barrier to entry, right? In terms of cost, time, resources. You literally need a team that is, a lot of fintechs don't even have a lawyer on board. So then they have to get external advice and external guidance. And there's just little tiny changes that all of a sudden you realize you can't offer the same product or service across the provinces, right? Or something silly that you'll read in a piece of legislation that literally basically says, I can't use, a consumer's information that they've given you to give them a better product, to lower their interest rate. Like, there's so many anomalies, and you really have to dig into these things, and it's time consuming. And a lot of companies will say, you know what, it's not worth it. It's not worth my time. And on the one hand, you could say, okay, great, barriers to entry, we'll keep it Canadian. And that is what we're seeing, right? You're seeing a lot of international players try to come here and navigate this crazy complex regulatory web. And they just say, and they actually have the resources and they have the means and the people, but they just say it's just not worth our time. And we're not a huge market, 35 million people. Like, at the end of the day, we're a huge country, but there's not that much. And the payoff has to be there. The reward has to be there for somebody to navigate through all of that. And, we need some harmonization, and we need somebody that sort of takes control at the top and looks at all of these various pieces and what does it make sense. Often too, coming back to my point of, we're over-regulated. A lot of the things we're doing, the services we're providing, products, they already exist today, right? We're just doing them in an innovative way, again, in a more accessible way. So the legislation's there, it's just not appropriate. And it's, trying to fit a square peg in a round hole. That's often what we're doing. You look at even crypto regulation and leveraging the securities framework. Great. It probably makes the most sense out of any of the competing regulations that are out there, but it's still not the same. We're not talking about the same thing, right? And so rather than coming up again with new legislation, new regulations that is appropriate, we're just trying to leverage what's there. And again, that's just creating friction. It's creating barriers to entry. It's creating cost. And it's not easy, right? It's not simple to navigate. And if, so our three companies, large companies, we're having difficulty navigating through all of this. Can you imagine a startup, somebody who is, has a brilliant idea, and literally this is so daunting, right? How do you even start? Where do you even begin? And even if it's within one province, you're still doing that provincial federal dichotomy of figuring out, okay, where's the consumer protection and payments and lending, and we've got, it goes on and on, privacy for that matter, right? So it's challenging.
So, so one, I think that's hitting the nail on the head. I mean, one of the recommendations from the Bureau was for, I think, Canada to have a fintech lead, not just say an open banking czar, but an actual fintech lead that would look at this broad range of issues, not just one or two here and there. Because I think from a regulatory perspective, the fintech dilemma is broader than any one public policy initiative. It's this long list of them. But Lawrence, before I get to you about how you've tried to explore to manage a regulatory issue in payments, Hannah, I want to turn to you for a second. In the past, we've talked about jurisdictions that we should look to and learn. When you hear us talk about all these issues, in what jurisdictions do you think fintechs have it easiest? In which jurisdictions do you think regulators have done the best job of solving this broad range of issues for fintechs?
Yeah, that's a really good question. I think we look towards the UK, Europe, APAC quite a bit when it comes to aspects of, what regulators have done right, and not everything. There's a lot of things that we can also learn from. We don't have to also replicate the challenges and mistakes that they've gone through. We have the opportunity to do it really well because we're so far behind. Like Lauren said, but I think the UK is a really, really good example, and particularly the instance where the UK saw significant growth in financial services following the 2017 decision by the Bank of England, which allowed non-bank payment companies direct access. And I think the system was called like Faster Payments, Instant Payment Scheme, something like that. And so fintechs such as Wise, or known as TransferWise, and Starling Bank and Revolut, actually under this regime were able to access, direct access the rails, and were able to create these really, really successful global businesses, which we've seen grow. They had a home base where they were able to do this, really capture the market, really create innovative products, and were able to expand globally. And then we saw, Revolut come and go from the Canadian market. And so, that's not the only reason. There was a myriad of reasons, but it's definitely an indication of how insanely difficult even a global, extremely well-funded player is having challenges navigating the ecosystem that we have.
Lawrence, one of the questions in the chat was, when do you think you'll be able to access the RTR, or do you think you'll be able to access it in the foreseeable future? It was reported recently that you may have done something to suggest what your answer to that question is. You've actually applied for a banking license, if I understand correctly. Why are you doing that?
Yeah, so I guess the first thing is, when will fintechs get access? Once we've got the RPA in place, which I think will take 2 to 3 years, because they need to build a platform, they need to onboard, they need to start the regulatory process. Then we're going to argue about liability. And once we finish the argument about liability, then hopefully we can get changes made to the CP Act, which will allow them to broaden the access. In between that time, the real-time rail will launch, but it'll only be available to banks. So banks will have a competitive advantage with a brand new shiny rail, and the irrevocable real-time payments that you've heard Alice and Hannah mention. That is essential for their businesses and ours. And then further down the line, maybe sometime in the future, the Bank of Canada will start to think about what it means to actually have a settlement account and provide direct access. But that requires links to be in place and to have been stable for a while before they'll let anyone into the club. And it's not only the real-time rail that a lot of fintechs want access to. They want access to all of the rails. The RTR is just the most urgent one. But if we had same-day ACH, that would help a lot. If we could access the large value system, that would help a lot. But those things are going to take a long time. So why have we decided to become a bank? We decided to become a bank because we want to create that industry utility. And we're happy to do that on a cost plus basis. to reprice the entire industry to allow the fintechs to be able to compete with banks, to be able to foster an innovative environment, and indeed that will even allow other payments companies to compete with us. And we're really happy to onboard any of our competitors into that platform, because we're going to do it as an industry utility to solve this access problem. So, way back when, the bank application was our plan B. But the further and further access gets for fintechs, the more likely I think the bank plan B becomes plan A. So, in all honesty, having been through, lots of conversations with OSFI in particular over the last couple of years, I've got a few thoughts. The first thing is the one thing that is not regulated by OSFI is payments. And that's because OSFI mainly focuses on prudential regulation. And what we want to become is a payments bank, which doesn't lend, doesn't take traditional consumer deposits, therefore poses no risk to either the ecosystem or financial stability. We won't ever be in a situation where we are creating money out of thin air. We won't be utilizing the fractional reserve capability of the Bank Act. Indeed, all we want to do is process payments. But unfortunately, OSFI's regulation is not designed to regulate payments-only banks. So we're stuck in this horrible place where no one regulates payments done by banks today. Because as we already heard from Hannah, it's not regulated by FinTrack. It's not really regulated by OSFI, which really focuses on the prudential regulation. So actually, PSPs will be the most regulated payments businesses, more regulated than actual banks. So the easiest route to get to market is actually to become a bank. A few other comments on some of the other things that we've been discussing, and that is, I think the lack of access in North America has actually driven and fueled the crypto boom. Because they couldn't play within the existing ecosystems, it was easier to actually play outside of the existing ecosystems, and that's encouraged and grown and flourished the entire market in crypto. And in places like India, where they've effectively shut down crypto, it's okay because Paytm does most of the payments because there's broader access. And, it's very easy for China to turn off crypto because, they've got Alipay and WeChat Pay that do all of the vast majority of the payments. So I see the areas where crypto is most prevalent and most used are markets where access was denied. So when we stick our head in the sand and we pretend crypto doesn't exist and we try to regulate everyone else out of the markets of the existing ecosystems, other things flourish. So I think it's time for our regulators to get their head out of the sand and make space for innovation. And in the UK, they really did this, and Hannah already articulated this pretty well. What they actually did is they said we want to have a regulator that is focused on innovation first and then competition second. And then later on, we'll worry about all the other things like consumer protection and those other concerns. But because what we want to do is create a new market. And if I go back a few years, Jennifer from TFI had Toronto as the second city after New York in terms of fintech innovation. And honestly, if we look now, we're probably a distant fourth because London has screamed past us. And they've screamed past us because they actively invested. And if you're a smart engineer and you want to develop something cool and new, you go to the places where the regulations allow you to flourish. And, Revolut was started by Russian guys who went to the UK to start it, right? TransferWise, or now Wise, was started by guys from Estonia who went to London to start it. So they've been the net beneficiaries of innovative people from around the world because they created an ecosystem where fintech could thrive. So they're net importers of talent. They're net importers of innovation. They've encouraged the competition. And we're seeing that starting to happen in Brazil now, where, as I said, 41% of payments have moved out of banks onto the real-time rail in just 6 months.
So there's a lot there. And I'd like to pick off pick up where you left off on Canada being behind. Around the world, in some jurisdictions where we look to for lessons and leadership, we see that there's broader access to payment systems. We see there's modern payments regulation. We see there are fast modern payment systems. We see there's open banking. We don't have the same institutional confusion, the disparate regulators across the different levels of government. In Canada, I think it's fair to say we don't have those things. Self-evident in some cases that we don't have those things. I'd like to hear from you all on this two-part question. One, what's at stake if Canada doesn't make progress on this long list of issues, making it easier for fintech to thrive? And two, what's the underlying reason why it's so hard to make progress on all these issues? Alice, you go first.
So as you said, we're behind and we're just going to continue to fall behind. The rest of the world will stifle innovation, will stifle competition, and ultimately it's our Canadian consumers who will pay the price, right? Through higher costs to access products and less choice. I think it's as simple as that. I think the fintechs that are in existence right now, or the ideas that are thriving, they're going to cease to exist. Whether it's bankruptcy, they just can't literally survive, consolidation within the space, or really just abandonment, right? It's just not worth it. And it's too expensive. It's too burdensome. It's too difficult. We just can't do it. So I think that's what's at stake here. An entire industry could just literally, vanish. If we're not giving the ability to flourish and thrive, and Canadians are going to be the ones that ultimately pay the cost. And what's missing? I mean, I think, Canadians, we like to agree on everything, right? And it's almost like we're trying to find the perfect solution that appeases all the players in the system, and that's just not possible, right? And I think we have to realize that we don't need perfect. We do have the advantage of not being a first mover and looking to the other jurisdictions. Like, we don't have to, to create a Canadian unique. Why would we want to do that right now? First of all, there's no time. We spent too much time. Let's just, leverage the learnings that are out there, come up with something that we can reiterate. I mean, that's what fintechs do, right? When we come up with solutions for our consumers, you start with something and then you keep making it better. And there's no reason why regulation can't follow suit. We need, at the policy level, we need innovators. We need forward-thinking policymakers, tech-savvy policymakers. And I think part of that might have to be some collaboration, get representatives from the fintech industry into government on a consulting basis that can help drive this change, that can help drive this regulation. And again, it's not just about more regulation and oversight. It's really about creating that level playing field. The two things go hand in hand. And again, that is what we are missing today. And that is really what, for me, is crucial in order for Canadian fintechs to thrive and really catch up to the rest of the world.
That's a great answer. We have 3 minutes left. I want to get Hannah and Lawrence on that question too. Hannah, 1.5 minutes, same question.
Yeah, no, I think Alice actually covered all of it. I think what's actually going to end up happening, and we've talked about this already, which is we're at a period in which it's more regulation without access. And I think Lawrence put it really well, where it's like you're going to have paytechs and fintechs that are more regulated in, the areas of like payments than actual banks are, right? Which is really, really problematic. And from the perspective of it's already extremely expensive to be in this space. It's very complex. I've worked with early stage fintechs in the past, and the thing that always gets them is navigating the really, really complex regulatory environment. Not to say it doesn't exist. I don't think not to say it shouldn't exist. Sorry, I should say. I don't think any of us are arguing that, banks aren't necessary integral, parts of our ecosystem, and these regulatory frameworks are not necessary, but rather like it needs to be done in a way that actually allows us to be creative, fosters innovation, fosters competition. I think the biggest challenge we have in the Canadian market is on so many levels, there's a lack of competition because part of it is the regulatory environment. Part of it is we're super small. There's a myriad of challenges, and the additional layer of regulation and the way we're sort of contemplating it right now is not creating a conducive environment. So I completely agree with Alice. I think in a couple of years, we're going to see a complete flattening, and even more flattening of an already very, very small fintech and paytech ecosystem, just because it's going to be cost prohibitive to be in this space.
And Lawrence?
Yeah, so I think we need two things. I think the first thing we need a cheerleader who's in government. So if we look at Australia, it was Scott Morrison. If we look in the UK, it was our own Mark Carney, who was the governor of the Bank of England at the time, that really drove the innovative change, that took a risk and bet on fintech to create an environment that was exciting. I think I look at other markets that have been very successful. Lithuania have very few domestic banks, so it was in their best interest to promote, local competitors in the fintech space, because it was foreign banks that were taking all the money. So we have a lot of domestic banks. I don't think that any fintech is going to be a direct threat if you give them a payments access. But if they are, then there's a problem with a bank. Because if a bank can't compete with a fintech with all the resources that it's got on a level playing field, they shouldn't be in business. So, I don't think that it is unfair to say that our banks have not stepped up because there's no competition. The last thing I want to say on this was, in 2013, we met with the Bank of Canada to discuss a central bank digital currency, CBDC. And that was the first conversation, to my knowledge, that anyone in the world had about, digitizing central bank money. And despite that, we lost the opportunity to be the first to market. China's beaten us. The US will beat us. Europe will beat us. Lots of other countries are beating us. And it's absurd that we let innovation like that slip by. Interac was one of the first in market with a really good competitive P2P solution. But instead of providing broad access, they kept it within the banks. And again, they've been out-innovated by all the other countries. But we were first to market again. So I think we've got to leverage the innovative culture that we have and the amazing talent that we have in Canada, and not continue to export it to other countries because there's no market here. We're a Canadian company. We do most of our work outside of Canada because we can't actually compete in Canada. It's so sad.
And on that note, that's all the time we have today. Thank you to this distinguished panel for the great discussion. I'm super excited to have had this discussion with you. And thank you to all those listening in.
Thank you very much.